Coming up today, stocks continue their pullback. Will the jobs report tomorrow make it worse? Bitcoin hits 100,000 for the first time. More details on the United Healthcare killing and why BlackRock says the world economy has exited the boom and bust cycle. Let's go, guys. And welcome back, everybody, to the Daily Market Review. Once again, the market trading in a pretty tight range here. However, we are getting a few little signs we may be close to a short-term top. S&P 500 oscillator has gone into overbought territory, and if it were to stay there, that would indicate persistent buying and upward drift. However, we are getting a few sectors pulling back up the front here today. Industrials, financials, along with REITs and healthcare still the weakest. See that in my sector breadth table as well. Everything except tech is pulling back up the front here. And just looking at a month-to-date sector performance chart here, ever since we kicked off December, huge amount of dispersion, almost like a K-shaped market. We've got some stocks going up, we've got other stocks going down. And just looking on my regular technical chart, we are getting a few reversal signals firing off here as well. And just looking back the last few times, we got these reversal signals, can quite often indicate the market's pausing, consolidating, catching its breath, or even making a little bit of a short-term top. And we can see that in the equal weight indices, pulling back further today than the main market cap weighted indices, along with the Russell 2000, taking out weekly lows. Not a huge move in volatility, is seeming to hold its ground here today. It too with my reversal signals firing off. Not a bad time to buy portfolio insurance hedges if you're into that sort of thing. And stick with me today because I've got an interesting one for you. I'm going to show you some charts and one asset you may not realize has a very close correlation with Bitcoin and what that implies. I think it could be a real eye-opener for many out there. However, before we get into Bitcoin and some follow-on thoughts and new details on the killing of the United Healthcare head Brian Thompson yesterday, first let's just cover a bit of the market, what's driving it, what are the risks, along with some interesting data for you. So one of the big key drivers of this bull market has been companies buying back their own shares, decreasing the supply on the register. And you think about Bitcoin with its finite 21 million coins, well, a lot of these mega cap tech companies, they have even better, decreasing supply, squeezes stock price higher over time. Buyback plans surge to a fresh record as the stock market heads for a near 60% two-year gain, the largest in quarter century. This bull market has definitely got legs, just haven't gone past the two-year mark, and corporate buybacks are a big driving force of that. These mega cap tech companies are so cashed up, they've got plenty for innovation, research and development, but also some spare change to buy back shares. And it seems this current market is less sensitive to economic data. It's kind of trading on its own devices. Whilst we're having a little pullback here, overall the trend is still pretty strong. We do get the jobs report tomorrow. Economists expecting the US economy to have generated 214,000 new jobs last month with an unemployment rate of 4.2%. So it's widely expected to come in line with that. But who knows, it could come in at 4.1. Maybe the market would have to significantly reprice the chances of another Fed rate cut in a couple of weeks from now. We got into the jobs report tomorrow morning. Interest rate traders given about a 72% chance the Fed will still cut 25 basis points in their last meeting of the year, but only pricing in 2 more cuts next year, leaving us around 375 on the Fed funds rate. And BlackRock's taken it a whole step further, coming out with a pretty bold headline today. The world economy has exited the boom and bust cycle. I mean, that is quite the claim to make. They said it's due to a fundamental shift driven by the emergence of mega forces, including artificial intelligence technologies. In its 2025 global outlook, BlackRock said it believes the world economy is currently in the process of being entirely reshaped by the emergence of 5 new mega forces, including the shift to net zero carbon emissions, geopolitical fragmentation, demographic trends, digitalization of finance and AI. They think this economic transformation has seen the global economy break away from historical trends. Going on to say 2024 has reinforced our view that we are not in a business cycle. AI has been a major market driver, inflation fell without growth slowdown, and typical recession signals failed. Now, I mean, they do have a point. There's been a huge narrative that we're on a cusp of a recession these last 2 years. It hasn't materialized. The bond yield curve may indeed not be what it used to be. And that huge 10 standard deviation event in financial markets from COVID, let alone COVID itself, may have indeed messed with the normal business cycle, not to mention the huge amount of artificial liquidity created by the Fed, something we've never seen before in history either. But I'm not willing to go as far as to say we're no longer going to have a boom and bust cycle, because we're currently having a boom cycle. And so to think we're in some sort of permanent bull market forever, I think is a little too optimistic and short-sighted. But I do agree, the US economy is poised to dominate for a long time, unfortunately at the cost of growing equality. Artificial intelligence is already creating winners and losers, already replacing a lot of jobs out there and is set to do more. It's kind of hard to see AI, automation, and robotics not getting bigger and bigger every year. These big companies can replace their labor force with robots for a fraction of the cost. You bet your bottom dollar they will. However, there could be a pushback from society, not wanting everything to be run by robots. We may start missing the human touch. However, that could very well become a premium priced niche service or product with humans. Because if you can get your services and products cheaper and have to deal with an AI robot, like most markets, people just gravitate to what's the most cheapest and convenient for them. Now the US is going in a new direction of, instead of being focused on offshoring jobs, production and manufacturing, it's a strong political will to bring them back. We just heard that today with NVDA and Taiwan Semi. They're in talks about producing NVIDIA's new Blackwell AI chip at Taiwan Semi's new plant in Arizona. We should expect to see more of this as well. And so we all know the US has absolutely been crushing the rest of the world when it comes to stock market performance over the last 15 years. However, it's pretty much justified by the huge growth in US corporate earnings versus the rest of the world. There are good fundamentals behind this. And that was really accelerated since the global financial crisis. You're looking at this chart here of world performance relative to the S&P 500. Except for 2009 and 2016 by a little bit, every other year, world stocks have underperformed US stocks. And just looking at earnings per share estimates for the Magnificent Seven here in the green bars, looking out next year, still expected to grow year over year, healthy double digits, starting with 2. That's incredible. Companies these size to still be growing 20, 21, 24% year over year. And the rest of the market is set to catch up and narrow that gap. And that was the real narrative of last year. Most companies were actually showing year over year negative earnings decline, whereas a huge divergence in the Mag 7 while they crushed it last year. But the story this year has been the rest of the market catching up. And so things could be aligning for the perfect supernova bubble of our lifetime, because not since the 1920s have we seen the potential for a major tech boom to coincide with significant deregulation and tax cuts. Historically, both have driven large booms in equities. However, big busts have always followed. So that's kind of what we saw in the original Roaring 20, the 1920s. A lot of new technology created, automobiles really taken off, a lot of excitement in the market, deregulation, tax cuts. However, you go back and look at the charts, it was the worst crash and drawdown in stock market history. Dow Jones fell almost 90% over the next couple of years, plunging the economy into a dark depression during the 1930s. A quarter of all American adults were unemployed, with regular folks lining up at the soup kitchen just to survive. So the ingredients are all there for us to go parabolic, but also trying to quickly catch up. China, it too wants to lead on the industries of tomorrow, making a big push into renewable energy. In fact, adding more gigawatts last year than the rest of the world combined. And they do have a key card to play with. Sheer dominance over rare earth elements, also required for future industries. Over 2/3 of global rare earth production comes from China. And unfortunately, at least at this stage, Europe looks to be getting left behind. We've got other countries like South Korea, who actually have more advanced industrial robots per capita than any other country in the world, along with Japan, been quite innovative with robotics. They've kind of always been the leader on that, especially electronics, and China looking to lead in AI and clean energy as well. Unfortunately, Europe starting to fall off a lot of charts and economically is on its way to becoming a third world country. Post showing up on my feed today. I'm Italian. Over the years, it's been painful seeing Europe's demise. 1960, European Union was 36% of global GDP. 2008, the US surpassed the EU. Today, the US economy is 50% larger than the EU. But I don't think that's all from just one side. I think the US has accelerated on their own, and Europe's kind of shot themselves in the foot on many fronts. And so Alessandra goes on to explain a bit more of this. Said the whole topic could be summed up with this cartoon. Europe's leading industry, full of red tape and regulation. Not to mention productivity. Fact is, Americans work a lot harder than Europeans, generally speaking. And look at that chart there. And that's just stifled innovation. Europe just does not have the same size tech companies that America and Asia does now. Kind of pales in comparison. And that's the thing socialists don't understand. You can't create wealth by dividing it. You create wealth by letting entrepreneurs innovate, take risks, and drive the economy. But anyway, I still have hope that things could turn around and you get the right leadership in there, it can happen quite quickly. South Korea, become one of the world's advanced leading economies in under 25 years, thanks to a good system and leadership. And before that, they had a similar population to North Korea, only a few more people. The Russians overtook North Korea, set up communism. The Americans set up capitalism in South Korea. And there's a photo of the two countries from space at night, clear to see which one's developed and prospered, or another one still being held down by a dictator and his family. But we still have a bit of geopolitical uncertainty and volatility out there that looks set to continue into next year. Still hoping for a smooth transition of power in the States. We just saw South Korea briefly go into martial law this week. Political instability in Europe, with Emmanuel Macron's government look to be dissolved. I think he's been one of the worst people ever for Europe. Sure, a lot of us will be glad to see him gone. Not only what he's done economically, but also culturally. I think it's a shame and an insult to natives. Then we could be on a cusp of a big trade war with China. Also other countries, Canada and Mexico in the firing line. We've still got bubbling wars in Ukraine, the Middle East. Hopefully they get dialed down, but there are for sure still political risks out there. And as I look at the iShares South Korea ETF, after that massive hammer on Tuesday. And unfortunately, the socialist leader, Lula, is back in charge of Brazil. So they've got another uphill battle to economic prosperity. Instead, Argentina's taking the lead in South America. Other countries doing well this year, Singapore, just breaking out again today. Well, Mexico also gapped down on those announcements of tariffs, but seems to have put in a bit of a double bottom here. And the Canadian market only did a slight gap down on their tariff announcement. However, looks to shrugged it off pretty good. Doesn't seem to all that mind for the here and now. And just moving on today to once again one of the most popular topics in finance at this point in time, Bitcoin. Looks to be doing a little bit of a rug pull as I speak, actually. Getting above $100,000 a coin for the first time today. And let's just go down to a 15-minute chart to take a look. Just expand it here. Look at that. That was the top in Bitcoin early this morning. Put in a bit of a double top, and this is a 15-minute chart. So just as I'm making this video, it's dived over 5%. Could be a sign of a whale or some whales offloading coins here. Unless we've just got some fresh news hit the wires that I haven't seen yet. Nothing I can see right now. But that's an interesting daily candle, isn't it? Daily spinning doji. And so it's all over financial media today. Super bullish sentiment across the board. Media, retail, and institutional investors. And economist Mohammed Al-Aran put it eloquently today. One of the big changes taking place in the US post-election is the emergence of a new counter-elite that is much more comfortable with innovations and disruption, is pro-liberalization and deregulation, and is generally less risk-averse. It is a change that, relative to what has been in place until now, significantly enhances prospects for wider institutional and retail adoption of crypto assets and therefore their role in the payments ecosystem and as part of investment portfolios. Now add that to the inevitable element of speculative demand that is typically associated with rapid price moves, and the result is eye-popping valuation gains. So I think that's pretty well put. There are definitely fundamental drivers behind Bitcoin's move here, with the pro-US government being one of them. Not many people had that on their bingo cards a year or two ago, because it was only about 6 months ago that Trump flipped on it, pretty much given the whole industry a green light. But like I said, we're getting some big calls out there now today, even from some of the most oldest financial institutions around the world. Standard Chartered boosting its call for Bitcoin to hit $200,000 next year. Bernstein going a step further. Bitcoin will replace gold as the premier store of value asset in the next decade. Our conviction in Bitcoin is beyond cyclical gyrations. New age premier store of value, replacing gold, and again, kind of similar to what BlackRock is saying. There's no longer boom and bust cycles. I mean, this could very well be signs of a top for both stocks and Bitcoin, possibly. And we've got Fundstrap's Tom Lee saying Bitcoin's surge is setting the stage for a year in stock market rally, saying Bitcoin surpassing a major milestone is one sign investors are about to see a year in stock surge. However, in my opinion, he's kind of arguing that the tail's wagging the dog, whereas I still think it's a dog wagging tail. And let me explain that to you. So first, let me just go to a long-term chart, and I found the 2-week time frame. It's kind of a nice middle point between weekly and monthly to show the chart patterns and turning points with a bit more granularity. And so as many of you guys know, in my opinion, Bitcoin's kind of like a proxy for liquidity and could be the biggest symptom of this liquidity-induced bull market. And so I started thinking about that and how Bitcoin is correlated to tech stocks. And so I didn't see this anywhere else, but I thought today, I wonder what correlation Bitcoin has with the leveraged tech stock ETF. And so I overlaid this chart with ETF ticker TECL. It's basically the NASDAQ levered up times 3. And we just click on that chart. Look at that correlation, which again, I think is undeniable. So here in the pink is the 3 times leveraged tech ETF. And you can just see how often and how closely the two assets move together. In other words, when tech shares are rallying, quite often so is Bitcoin. And even over the last couple of years, both are up a very similar amount. So you could think of Bitcoin as like an inherently leveraged asset, which makes a lot of sense because a lot of crypto traders and even big companies are using leverage to buy it. And so if you're a Bitcoin maximalist, you kind of also have to be a leveraged tech bull as well. And so I think Bitcoin is kind of at the nose end of this bull market. And there's the monthly chart of Bitcoin. And maybe, just maybe, this supernova high beta of an asset can go both ways. It may not always compound above 30-40% a year, as most people in the industry are convinced it will, like it's some sort of infinite gravy train. Because when we do get a real bear market in tech, those leveraged tech funds, like most of them, end up falling 99%. They constantly have to do reverse splits, just because most markets at some point will have a 40-50% drawdown, not to mention the built-in decay. And so if those leveraged tech funds have a huge 90+% drawdown, it stands to reason so could Bitcoin. Because like I said, I think it's inherently leveraged just to begin with, without even using any actual leverage on it like most people already do. And like I said, we could be getting some signs of a top. Nayib Bukele, president of El Salvador, showing off his P&L on X today, as he's a bit of a rock star in the Bitcoin world. Got over 600 million in Bitcoin, one of the first governments to adopt it as a strategic reserve. Another one from the CEO of the Satoshi Act Fund. We have officially entered the Bitcoin era. Another one from a Stanford PhD. This is an amazing day, Bitcoiners. We resisted the urge take profits. We resisted the urge diversify. We resisted meme coins and other nonsensical tokens. Today it is clear that Bitcoin is the future money for planet Earth. And in my opinion, it's funny how the biggest believers still think it's the future money. It's been around for a decade and a half now, 15 years. Nobody's using it as actual currency. And when you think about it, everybody's obsessed what the value of Bitcoin is in fiat currency, US dollars. If Bitcoin was the future money, then one Bitcoin should equal one Bitcoin. Who cares what it's worth? And apparently the worst currency in the world, the US dollar. But that kind of defeats its original purpose, in my opinion. Everyone's excited Bitcoin has hit 100,000 US dollars per coin. They're more excited about the fiat value of it, not the actual Bitcoin itself. Here's another one, breaking. Apple has announced they will be using Bitcoin instead of gold in the manufacturing of their next iPhone. And that's just a joke, guys. That's coming from a gold bull that I follow. But even Bitcoin Jesus himself, Saylor, reaffirming his intention to have his Bitcoin keys destroyed when he passes away, describing it as a pro rata contribution to everybody in the world who owns Bitcoin. Gee, what a nice guy he is, right? So Bitcoin maxis, you can rest easy, knowing your savior will definitely have his keys destroyed after he passes away, and you can trust him on that. Now we got the Hawk Tour girl, who went viral a couple of months ago on social media, launching her own meme coin, Hawk, which has already been rug pulled, and unfortunately she probably has no idea what was about to happen. She's probably been roped in by some clever crypto hustlers who are probably offshore, hidden identity, and she could actually be looking at doing some time. Law firms already coming after her. Here's one post today. If you lost money on Hawk, contact our firm. As the crypto was pumped straight out of the gate, like all these meme coins, then the insiders cash in, dump it on all their followers, down 90%. And we see this time and time again with some of the biggest social media influencers out there. Create these BS coins, hype them up to their followers, then absolutely offload on them. And so it looks like the Hawk Tour girl's recent popularity has now been shot. And I agree with Heisenberg on X today. If GameStop came out and bought Bitcoin, the internet could freeze. That to me is an easy trade. The number one meme stock of all time. Now's the time to do it. Bitcoin 100,000, things are hot. And we just heard from Roaring Kitty for the first time in a couple of months, posting this on his X account today. Front cover of Time magazine with a computer screen showing 1 minute 09 out of 420. That equals 69 seconds versus 4 minutes 20. Often used comical numbers online. What does it imply? We don't really know. Everyone's speculating what it could mean. Could it mean he's loading into GameStop? Maybe a cannabis stock. Either way, it was enough to get some action in GameStop shares today. 1 point up well over 10%. Heavy trading volume. Still finished the day up 6%. Along with its brother meme stock AMC. Also getting a rip there today. But still not much love for the cannabis trade. Actually looks to be putting in a bit of a double bottom here on a bullish divergence. I actually recently invested in a cannabis stock as part of my stock pick service, which has actually been doing a lot better than the whole sector. It's already in the profit. But this could be a good contrarian setup right here, because I think the new admin's going to surprise on this, since all new admin members are pretty much pro-cannabis. But anyway, guys, like I said, a bit of froth in the market, could definitely go higher. No reason Bitcoin can't go to 250,000. And if you made money on it, congrats. It's been a great trade this year. Nothing wrong with that. However, just keep in mind, be careful when using leverage on an asset that's already inherently leveraged to begin with. Now, just moving on to yesterday's big story and a bit of a follow-up on that. United Health and the unfortunate tragic killing of the United Healthcare CEO, guy who looks after the insurance arm, was shot point blank in Midtown Manhattan after he left his Hilton hotel early in the morning to head to an investor conference. Stock didn't really react yesterday, actually traded up, which is kind of weird why investors would get excited by that. However, different tune today. This is a big fall for the typically low volatile Dow Jones Industrial stock, down 5.2% today, as it's definitely sparked a bit of lively debate and discussion about the state of the US healthcare industry. First off, a wake-up call on corporate security. He probably shouldn't have been walking around the middle of New York City by himself, as he had been receiving threats. And you are the head of the US's largest healthcare stock insurance division, who denies almost a third of all claims, which is kind of mind-blowing to me. And can you imagine that, being a corporate executive at United Health and being proud that your company knocks back a third of all claims and your stock's up 10,000% over the last 25 years, on top of their tens of millions in bonus payouts and the like? Well, most of their customers are suffering, go bankrupt because of their medical bills. I mean, in my opinion, the largest healthcare stock up 10,000% in 25 years isn't something to be proud of. It's actually a little disturbing. And so it's shown a light on health insurance denial rate, because it was actually found on the shell casings from the bullets fired from the assassin, deny, defend, depose, which is clearly a play on the book, delay, deny, defend. Why insurance companies don't pay claims and what you can do about it. So he had on the bullets, deny, defend, depose. So like I speculated about yesterday, as it clearly wasn't a random shooting, it very well may be revenge on someone who got denied a health claim or just upset about the general state of the industry. So Wall Street's beginning to worry. I can imagine a few other health insurance executives today might be staying inside, might be calling up a local security company, getting a few guards, because that's the state of the industry now. If you're a health insurance executive, you can't just go walking around the streets because one of your customers that you've denied a claim on might kill you because they're sick of seeing you getting multi-million dollar payouts while they've gone bankrupt because they've been in an accident or something. And they've paid your premiums for 20 years and then they deny you any claim. It's understandable why some people can feel ripped off. But of course, what happened yesterday is not justified. Like I said, could actually be a wake-up call for the industry. And Elon Musk has chimed in on this as well, saying, shouldn't the American people be getting their money's worth? Commenting on this data here showing the United States has the highest healthcare administrative costs per capita compared to other developed countries, head and shoulders above, more than triple the next country, Germany, which again, it's kind of mind-blowing. And we can see that in this chart here, the percentage growth of healthcare admin versus doctors, head and shoulders. That's what you call a bloated system that ends up benefiting these healthcare executives the most, with these lavish payouts and their fund manager buddies who own most of the shares. The whole system's a rot, in my opinion, that needs a massive shake-up. And like I said, I'm down here at the bottom of the world and I get American-made pharmaceutical products cheaper than Americans do. It doesn't make sense. And like this post popped up on my feed today as well, can someone explain how a single Advil pill costs $36 at a hospital? And I've actually seen bills from other people where the hospitals billed them $85 per Advil pill. Just kind of mind-blowing. But that's the thing with healthcare. We don't really have an option whether we want it or not. Unlike, say, buying a new watch. We don't have to buy a new watch. But when you're sick, you need to get treated. And so I think the capitalists and profiteers have exploited that to maximum benefit. Not to mention the food industry profiting from making people sick to begin with. But that's what's different now. We've got the world's #1 efficiency creator set to become a big driving force of the US government, looking to do Javier Milei-style cuts, and along with RFK, big overhauls of the health and food industry. That's why it's important as investors to pay attention to this. And I, for one, would definitely not be a shareholder in United Health. They're a big overbloated elephant. I think they've got more room to fall than go up. And I just wouldn't feel comfortable about profiting from other people's misery. Third of all claims denied. It's kind of disgusting in my opinion. And the market appears to already be pricing in big changes. There's a look at the pharmaceutical ETF going into the election and coming out of it, getting slammed while the market was going up. And just healthcare stocks in general as well, having a bit of a fall there again today. And so like I said, the US healthcare industry needs to find a better balance between capitalism and compassion. Just moving on to commodities, we got OPEC Plus members agreeing to delay oil production increases, postponing plans to unwind several formal and voluntary crude production cuts amid a lukewarm outlook for global demand. But despite these sets of production trims and ongoing conflict threatening the Middle East, global oil prices have remained subdued for the better part of this year, under pressure from a tepid demand outlook. And there's a look at crude once again. Can't seem to sustain more than a multi-day rally here, calling up $68 a barrel. Gold as well, still consolidating, while agricultural commodities actually close to breaking out to a fresh yearly high. Price of food could be going up. And there's a look at the hot coffee trade. Had a bit of a pullback to start the week off, quickly bouncing back here. Also breaking out today, Tesla, taking out a new yearly high and just going out to a monthly chart, getting firmly back into this key resistance zone. All-time highs are above $4.15 a share. Here we are at $3.69. Also trading well, Amazon and Microsoft. Multi-month breakout there, while Apple continues to take a little bit of a pause. Had a pretty good run these last 2 weeks. Also hot today, Roblox, ripping up over 8%. Quantum Trade just won't give up. D-Wave Quantum, 26%. One of my favorites, SoundHound, having its best day yet in this run. 31% monster volume, 192 million. This thing is starting to get pretty overheated here. Also catching a bid today, Serve Robotics, last mile food delivery, doing trials with Uber Eats, up 9.7% today. Warehouse automation stock, Symbotic, seeming to defend this gap down. And once again, I'm seeing some activity in these fuel cell stocks, seeming to form a base. Push up off support. Plug Power again today. A lot of volume traded there, along with Ballard Power as well. After being slammed down all year, quite a bit of volume coming up, pushing off lows here. Otherwise, that's pretty much a wrap for the daily market review today, guys. We have the jobs report coming tomorrow morning, 4.2% unemployment rate, but option dealers are not pricing in any movement at all. The VIX one day at a pretty low 11. So any surprises on the jobs report would be a big surprise for the market. However, at this stage, it's looking very unlikely. And so we should be in for a sleepy finish to the week as the market is still in this low volatility grinding mode. That's it for today. Thanks for sticking with Click Capital, and I'll see you guys again tomorrow night. Cheers.